What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, the People's Champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, we're talking about one of my faves. That's right, my faves. And that's Footlocker, ticker FL. Now, I know this is a little bit of an earlier show, a little early show here with the 11 o'clock. Most of you are used to me doing those 1 o'clock shows, but a few reasons why we had to do it. First of which, these guys are going to report before the bell mañana. So it's a day of kind of thing. I don't like to cram these in too much, but there's a couple of things about it that I like. One thing I like about doing the morning of is that, you know, we're doing analysis here for the actual underlying stocks, so you don't have to necessarily, it's not just the earnings, right? We talk about what some of the risks are heading into earnings and what you should be looking for, but that by no means implies that this is all completely useless, right? Because we're looking at the company, we're looking at the tools on Zacks.com. You can gauge whether or not this is something you want to keep in your portfolio for the long term and see what was happening into the earnings. And then, of course, the fun stuff is trying to figure out whether or not there's an options trade here if anybody wants to do that. But obviously, that's not the center point of this. The center point of this is really digging in, getting elbow deep in some Footlocker, and seeing if it's a stock that you want to own. Trevor, the lone ranger here. Trev, it's just you and me. Just you and me, dog. We'll see if people start to trickle in here, but we got a few. All right. Feeling bluesy today, by the way. So I got a little BB King habit. Hey, Aaron, there he is. What's up, man? All right. So let's dig in like we always do. Initially, taking a look at the price consensus and EPS surprise chart here on Zacks.com. Black line corresponds to the right y-axis, which is price. Green arrows, earnings beats. Red arrows, earnings misses. The multicolored lines represent the evolution of our Zacks consensus estimates and correspond to the left y-axis. Okay. Wowzers, Footlocker. Just ignore the price for now, will ya? And just look at these beautiful estimates start to tick up into early 2014. Not only do you have that, but you have growth sort of baked in here. That continued to happen right up into 2016. And then, Piscadios. Now what happens? You got some growth, but these numbers started to tick down. Then you get expectations starting to chop around. You get new highs. Rope-a-dope came back, and then the bottom fell out. So the real drama happened here. When this really starts to get ugly and these estimates come down. No bueno there. Also, you know, some of these shoe companies, Nike's talked about it, the future of Nike. Potentially you have a 3D printer in your house that has all the materials needed to manufacture your own Nike right there. And then you just license it out and then print it up right there, which would be epic. I'm a shoe guy. I'm going to try not to gush about shoes the whole time here. Just got a pair of Jordan 11s. Very disappointed, though. I'm not going to lie. Which is weird for me to say. Usually I love all things Jordan. Well, not all things Jordan, because sometimes they come with the wax sauce. But I am a lover of many things Jordan, so I got them. I accidentally got 2 pairs because of Nike's terrible customer service. I know that sounds funny. I got 2 pairs because of Nike being stupid, but I totally did. Anyway, I've been to Footlocker a few times, and I haven't bought anything in a long time. just because everything has been so whack. And I think that's, the shoe company's fault. But one thing that's happened, I've noticed at Footlocker, and it's happened in the business overall, there's been a shift. All of a sudden, the brand with 3 stripes has shown up. That's right. All day I dream about stocks. Adidas. They came in, and now they're demanding a lot more of that shoe wall as Adidas' popularity has increased. But overall, it doesn't bode well for Footlocker, nor has it. Look at where these EPS estimates are relative to where they've been historically. They're down here. Tracy, Michael, how you doing? Welcome. Just going over this dramatic static we're having here. This is terrible. So that's why you had the drop. You got a miss, and then you got another miss. So we're talking back-to-back misses here for let's try to draw a sideways angry face here. It's not working. So it hasn't been good, and now you're kind of searching for a bottom. Is it over? Are we there yet to the downside? Ugh, never what you want to see. Now, here's another thing that I'm going to talk about, guys, is what I like to see, and I miss bottoms sometimes, but that's fine, because you know what I also miss? I miss cutting my fingers off trying to predict bottoms, okay? I'm very patient in waiting for the turnaround, and it's one thing to look at the technicals and say, oh, there's the turn, it's oversold, it's going to bounce off a certain level, and blah, 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 blah. It's another thing to see the turn in the earnings estimates. Now, when you see that, that's when you could start to think about buying some of these stocks and getting a real turnaround play where you're going to make money, because there's still plenty of money to the upside to be made, whether or not you pick the absolute bottom or you pick, an interim bottom, right? The bottom level 2, the second floor. If it's a 10-story building and I don't get in on the first floor, I get in on the second floor, I've still got plenty of upside remaining, right? So I always wait for the trough in EPS. So that trough could be developing following a good report out of Footlocker, but the trough is not there in EPS yet. It's not there. Okay? I like to wait for troughs. Not that I eat at a trough or anything, or drink at a trough. I've gone. They have a trough. I have gone in a trough. They have a trough in the bathroom at Wrigley. It's gross. It's better than it was, though. It used to be really gross. When you're like 12 years old, it's the scariest thing on earth. Footlocker. Zach's rank number 3 hold right now. You're going to see the reason for that is just a lot of indifference. Their retail apparel and shoes industry in a top 41% of our Zach's industry rank. So again, mediocrity. The theme of mediocrity. They can report before the bell tomorrow morning. Let's see what's going on here. Revenues contracting. Contracting revenues for the current quarter. That's not good. Next quarter looks like 2.65% growth, so that's okay. Current year, shrinkage. Next year, shrinkage. Double doozy shrinkage, current year and next year. Hefe, how you doing, buddy? Look at the EPS side of things. This is no bueno by any slice of the imagination. I don't know what the heck this is. These look like stinky numbers. These are stinky numbers. Don't worry about this number. That little guy, I won't worry about that little guy. Year-over-year EPS growth for the current quarter, though, negative 29. Next quarter, negative 14. Current year, negative 18. Next year, negative 5. A lot of negativity surrounding this name right now. And remember, we don't like retail anyway. So they're out here looking for a reason to slash, burn, and punish retailers. EPS contraction is a pretty good reason. Over the course of the last 30 days, you got 4 analysts dipping their estimates for the current quarter, current year, and next year. But over the last week, one brave soul has gone further for the current quarter, current year, and next year. That's doesn't bode well for the current quarter. Doesn't really bode well for next quarter either. $1 holler down to 80 cents. Next quarter, $1.41 to 117. Current year, $4.53 to 3.94. Next year, $4.65 to 3.71. Nothing's moving in the right direction. And look at this. Looky here. And the last earnings report 90 days ago, right? You're looking for $4.53 for the current year and $4.65. Now, all of a sudden they go, you know what, we're going to make a lot less this year, but we're even going to make less next year. That's why the bottom fell out on these guys, okay? Surprise, 28 cents to the downside. Surprise, 2 cents. So this was the quarter where they got all of the duct tape and bubble gum they could find to try and glue these shoes together, and then it fell out. So the question is, did they kitchen sink this quarter? And the answer is no, because you have the disappointment there, and you still are going to have a disappointment here, and well, not a disappointment, but you're going to have contraction, right? So what I mean by kitchen sink, what companies will do is then when they know they have a quarter where they're going to miss, they will do a little bit of financial engineering to just put all of the bad news that they can in that one quarter, okay? It's like getting caught. When you get caught red-handed and you go, whatever, it's a lost cause, so we might as well, we might as well throw this in there, throw this in there, throw this in there, throw this in there. It's like when you're trying to keep your budget intact, like a certain way. You only want to spend X amount of dollars, and then you're at the mall and you're like, you know what, screw it. I don't care. I'm gonna get that bag. I'm gonna get those shoes. I'm just gonna, whatever. Next month I can start saving. They just kitchen sink it. They just quit on it a little bit. Did they do that or not? I don't know. Oh, hi, A-Matt. Fancy seeing you here. Footlocker. There you go, B-boy. That's what I'm talking about. And then you just go, okay, well, by the way, I actually have been dating Ashley and Brittany and Tiffany and insert name here. Footlocker. Look at this gap and go. Try to get back into it. Let me draw that more crooked. Just kidding. Nice little firm cap here. Look at this nice little volume profile that ended up getting filled out there. Most of that being above. So in case you forgot, we're zoomed in a little bit here, but the Thug Pink, where's Wild Bill? Wild Bill's Thug Pink is a 200-day, right? The 200-day. I always say if you got a stock trading underneath the 200-day moving average, you better have a darn good reason why it's trading below the 200-day moving average. Let me tell you, 30% EPS contraction is a darn good reason to be trading below your 200-day, let me tell you. So there's that. And then the 50-day providing short-term resistance here at 32.72. Now, if we zoom out a little bit, and if I put the MACD on here, you guys would see. Where's Kurt? Kurt, there's a death cross for you. That ends up working. Look at the resistance at the 50-day in August. And then it's coming up to test it here again today. Let me get rid of these Bollinger Bands. They're fun, but I subscribe to the KISS method. Now, bulls do have a feather in their cap. Commodity channel index gets down to oversold, crosses over the zero line, and the stock is starting to make a little bit of a move. But the question is, can it get above that upside resistance? First at the 50-day, then at the volume point of control, which is really 34.5s, then all the way up here at the top of the gap. Top of the gap, 36.80 is the top of the gap. 36.80. Which is well beyond that 50-day 32.72. And then this sort of volume, high volume node here, 34.50s in the 34 handle basically. So lots of topside resistance. Bottom end support, 28.42. 28.42. What's this? 28.68. How was my pizza? It wasn't terrible, Emra. It wasn't terrible. On a scale of 1 to terrible, I give it a 4. It was edible. It cost $4. And I give it a 4. I give it a 4. I ate it like a real jerk, though. I didn't even cut it. It was a medium, and I just started biting into it. And my girlfriend came home and was horrified. I think she had to take a really good look in the mirror and decide if this is something she wants to stick around with. What happened to Best Buy? Oh, Best Buy's in trouble. Oh, the great Dave Didi strikes again. Thank you for that, Emra. I need a boost in confidence every once in a while. So this is pretty good. Emra, you got a pizzeria in Pittsburgh? Let me tell you what. If I ever find my way to Pittsburgh, I want to be knocking on your door, my friend, because there's nothing I like better than a nice pizza pie. All right, let's get back to the task at hand. Shows. All right. Of course it was enjoyable. Of course. Even bad pizza I enjoy. All right. So. Let's look. Yeah, right? Kurt, Jack. How you guys doing? Trickling in. Trickling in a little later. All right, look at this. Revenues. Kind of hits this brick wall, and now it's starting to get a little rough here. Let's look at EPS. Buffalo chicken. Buffalo chicken pizza is pretty darn good. I have done that. It is good. EPS. This is going to get ugly. Look at this, guys. 2018, guys and gals. 2018, 18% contraction. 2019, 5.8% contraction. They're even forecasting out to 2020 that it's going to be ugly. The writing is on the wall, my friends. The writing is on the shoe wall. Contraction at Footlocker. That's no bueno. There's a lot of things doing this. First, you just have the death of the American. HIIQ is a profit, Kurt? Oh man, we got to go back to that. Remind me of that. There's a lot of reasons why this whole Footlocker thing. First, you have the quote unquote the death of the American mall, right? So certainly foot traffic being down is putting some pressure on these things. Okay, we all know that. The other thing is more direct to consumer business. I'm on my sneakers app, Nike sneakers app. Now, if they could get customer service that was better than like Comcast, I'm not even gonna say that because now Comcast customer service is fantastic. Nike customer service is the worst customer service in the history of the word customer or the word service. I was on the phone for 45 minutes. I got through and the guy had no clue. The guy told me I didn't get my shoes. So I scrambled to try and get them somewhere else. And then I get an email from Nike an hour later saying that I got my shoes. So I got 2 pairs of shoes, which is fine, whatever. I can sell one, but I mean, how do you call customer service and they tell you you don't have some? It's like he had no access to any systems whatsoever. Completely and utterly useless and disappointing, and not the first time I've been disappointed by Nike customer chat. Loserville.com. All right. Now that my rant's over. Ugh, I had to get that out. No one else would understand but you guys. Overall, finish line, Footlocker rather, not looking good, my friends. You don't want to see that kind of contraction. Now, this should be squeezing valuations. Pop it like a pimple. Mr. Chumber, how you doing? Look at this. 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 That whoopee cushion sound that you hear is the air escaping out of Footlocker's valuation. Forward 12 PE, okay? Now, before you get all excited and go, hey, they're only trading at 8 times forward, they're also contracting, right? So there's a reason why they're trading at a discount to the S&P 500. It's because there's actually growth in the EPS on the S&P 500. Ain't no growth in this Footlocker. And now if you look at the rest of the business, they're also trading at a discount. So there are going to be people that are going to be out there, the bulls. This is a feather in the bull's cap technically, but don't get caught in that value trap, my friends. The value trap is when the PE gets to such a level where you're like, oh my gosh, it's so cheap. What a value. I have to buy it. Keep a close eye on Tracy. Not you, Tracy, but Tracy Reinick, the Zach's Tracy, because she's our value investor. And when she starts to peck at some things like the Footlocker, that's what's up. Then you know. But when this doesn't turn around and you get this where Footlocker's leading the way down on valuation, that's because that EPS is no bueno and continues to contract. So we want to see expanding earnings growth, not earnings contraction. No. Now looky here. As part of that valuation collapse, Footlocker's price to sales actually just came to be in line with the rest of the industry. See that? So the whole time they were trading at a premium to the rest of the industry in terms of price to sales, and now that's come crashing down. So when you're looking for a value, don't get caught in the value trap of forward earnings. You got to also look at this price to sales ratio, and we're down here in the price to sales. Don't get caught in the giant twilight zone of the value trap that is Footlocker. Let's take a look at the options chain now. Oh, wait. No, wait. I lied. One more thing. Consolidated surprise chart here. Carnage. Negative 33%, negative 14%. I mean, they have been slaying these poor guys over at Footlocker. Slayer. Just destruction. Terror. And why? Because of the EPS disappointment. But look at the revenue disappointments. Huge revenue disappointment. They've been disappointing in revenue for a while here, right? But really what put it over was the EPS, because their last saving grace. The saving grace was essentially, hey, you know, even though they've seen some revenue contraction in this quarter and this quarter, this quarter and this quarter, you saw the revenue contraction. At least on the EPS side, they've been doing okay. That's basically what the market has said to them. Now we're back on the EPS side, and what are we seeing here? Baked in sadness, baked in sorrows, baked in losses continue for Footlocker. So can you tell me why you want to buy Footlocker? You think it's bouncing maybe, value? And you think they're not going to disappoint as much? Well, they won't disappoint as much, right? Maybe they won't, you know. Maybe they won't get sent to jail for a felony. Maybe it'll just be, you know, a misdemeanor. I don't know. No bueno. No bueno. All right, let's look at bar chart. Go over to options quotes. These guys reporting before the bell tomorrow, which is going to make for a fantastic morning after session. 9 a.m. tomorrow. Hey, maybe I should drink Bloody Marys and screwdrivers live at 9 a.m. while we're doing it. What do you think? That's a terrible idea. Good way to get fired, too. Footlocker, $32. Oh, wait. Stacked side by side. So these guys will be in play tomorrow. Okay, we're going to be able to get in here tomorrow and have some fun with these guys. So, $32. Let's look at it. Pull up the handy-dandy calculator. $32 holler to calls, 195 by 210. Let's call it at 203. At the money puts, 220 by 235. Let's call it 227. That's 430 at the $32 holler. That's 13.43%, son. They are looking for some fireworks at Footlocker. Wow, that's a lot. But that's what we've seen. We've seen this. We have seen this. Did I do that wrong? No, I didn't. Okay. So we've seen a lot of moves. So what did I say? Over $4 is what they're looking for. So that puts us 36 and 30s. All the way up here. All the way down here. So this is sort of the world. Here's our realm. And I like to draw this out on the chart sometimes, on the options chain sometimes, right? Because then immediately you go, oh, what about selling out of the money here, selling out of the money here? You know, you get to size up some things, right? Getting vertical, okay? I think, and who said it here? Emra said it. Best Buy carnage. What do you think? We get some carnage, and I think there might be some carnage again. Part of the reason, look at this run up. Oh, you silly guys. That's never good. Oh no. What if they do that? Is the market that mean? Would the market run Footlocker up into the number and then destroy them? You betcha. You bet. Who used to say that? I had a teacher who used to say, you bet your sweet bippy. 32 is good. See, we've still got this going out to the monthly. So we're going to go to the December expiration. I'm going to go back. We're going to have a lotto on this one probably too. Here we are in December. Bears. Look at how expensive this 32 put is. I mean, God. Oh, you think somebody else is betting on these guys going down? Why did I say 30? What? Hang on. I want to correct myself for my stupidity on the other. I went out to 36 and then I did 30. I meant 28, guys. I meant 28. Oh. Anyway, let's get back here. 32s. 28s. You know what's coming. If you know what's coming, raise your hand. I can't see any of you. The halvesy. You know I like the halvesy, right? I always like the halvesy. I'm not going to do the halvesy this time. Full test, guys and gals. Full test. He's a madman. December 15th expiration, $32 put's going to cost you $268. Simultaneously selling the $28 put, you're going to get a $1 holler back. Net outlay, $1.68. Difference in the strike price, $4. Minus that $168 is $232. You make a $168 or 138%, my friends. Wow, and that is, you can make 138% if Footlocker goes and closes at or below 28 at expiration. Now look at this, 138% if you do it that way. Now we're going to go back and do the halvesy. So what I mean by the halvesy is, rather than doing the whole thing, we get here. So you still go long the 32 put for $268. Simultaneously go short the $30 put for $173. Net outlay here is 95 cents. Difference in strike price is $2 minus the 95 cents means you can make 105 on 95, 110%. So you can make 110 for the stock going here to here and another, what, 28 for it going from here to here, right? It's just better just to do this one. Quick little double up. I think that makes more sense. So here goes a bear debit. Bear debit is long the December 15th 32.30 put spread for 95-cent net debit. Nice little risk versus reward. We see what's happening with the overall market on Footlocker. We've seen what's been happening with the stock, and kind of that's where we're at. Okay. Bulls. Now here's the thing, Bulls. Bulls, we've got 32.72 to the upside, which might get hit today, intraday. I said 36 was the top end of this, 36.80. Bulls got to believe you get every bit of that 36 on a good report. This is going to be a bold call for the Bulls. I'm going to look like a madman here, guys. I never do this. 5-star risk on your Bulls. Now listen to this. Because you should be handsomely rewarded in the Footlocker bull case. I don't think there's any way Footlocker has a ho-hum report, kind of goes sideways. I don't think that's going to happen. I think they come out and they burn this Footlocker to the ground, or they take a run at the shorts. If they take a run at the shorts, I think an out-of-the-money call spread is the way to go. The $34 call is going to cost you $165. Simultaneously selling the 36, you're going to get back $105. So this is 60 cents at risk. Difference in the strike prices is $2 minus at 60 cents is $140 you can make on 60, or a whopping 233% on this trade. That's right. 5-star risk, meaning extraordinarily risky trade. Bull debit, long, December 15th, 34-36 call spread, 60 cent net debit. So what am I doing here? Crazy Dave. Basically what I'm saying is, if you're going to have the chutzpah to go long Footlocker into this report, given the bearish overall view of it, you need to be handsomely rewarded for your risk, because there is a high likelihood that these guys have a bad report and the market doesn't like it, okay? So if you're going to be a contrarian and come on here, or you just want to do the anti-Dave trade, just so you know, none of these are ever anti-Dave trades, right? I offer up stuff. I offer up bulls, I offer up bears, and then I give you my humble opinion as to which one I believe is going to work. That doesn't mean that, you know, I'm never 100% sure of one thing, and if I am, you should fade it. And I'm never, you know, there's a probability matrix here. So I'd give it a 20% chance that Footlocker goes up on this earnings report, and an 80% that it goes down. That's what I'm looking at. That's what I think. I know that sounds aggressive, but anyway, so in that 20% chance, I think it goes up a lot, and I think that these guys gotta. You're welcome. 9-year-old trembling at the trough. It's frightening. It's a frightening thing. Okay. Thanks for hanging out, Tracy. Let's get in this front month. Front month lottos. Look at how rich this is. I don't know, guys. This is awful expensive. Look how far out of the money. Look at the IV. Look at this, Kurt. Kurt, you're talking IV. Look at this. Look at these numbers in the front month. Colossal. Colossal. Very expensive to put on a lotto, my friends. If you want to do this, just out of the money call spreads are probably better. If you really want to burn some money, tomorrow morning, I think you just wait for the reaction, and then we can go ahead and try and trade that. But this is pretty, this is out there. Very expensive. I wouldn't do it. Unless you do an out-of-the-money spread, right? So this 34.35 on the bullish side, this 29, 28 on the bear side or further, right? This is where you might be able to make some money, but it's risky business. I think I would avoid a lotto, even though it's cheap. Trade that pays. Bear debit. That's what I think. I think we get more pain and suffering out of. Oh, Astara, I like it. Instead of wrists, instead of stars, daggers would be better. I like it. I really like it, Astara. Kurt, never. Never, 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 ever, 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 ever. Why? Because look, man, if you go short, you're on the hook for anything that might happen. Any crazy thing that might happen to the upside, you're on the hook for it, okay? There's no way to really clearly define your risk, and especially heading into after hours, you've got less liquidity, so there's a high likelihood that, you know, it spikes, and then you're like, oh my God, and then you end up top ticking it, and then the thing starts coming down, okay? It's way better to buy, if you want to, if you're feeling that way, buy a put outright. At least that way you're going to clearly define what your risk is. Because when you're short, you have unlimited upside risk, and that's a well, technically downside risk, right? The upside of Footlocker puts downside in your account, and that is no bueno. It's all about managing the risk, and you can't manage the risk just going short into the earnings. I've had some people get slain doing that, okay? I like it, though, Astara. How much risk? Like a Mortal Kombat theme, you know, of like daggers. How many daggers it is? That would be fantastic. If only I had a guy that would help me with stuff like that. Too bad Pando's not in on this. Pando, that's an inside joke that Pando. If only we had a guy. Take two. What do you mean, where was I on Take Two? Take Two was in Surprise Trader. Oh, yeah, you went straight short. Oh, yeah. Okay, I get you. I'm sorry, Kurt. You got to be careful with that stuff, man. Victory lap? Is it victory lap time already? Look they took it right down to the 50-day. Oh, 200-day, I mean, rather. That's right, 200-day. Keep an eye on that. Berkshire. What are you 67 years old? Berkshire? You've got to be the oldest millennial on Earth. Hefe, I thought you were a millennial. Are you the last millennial? Are you a millennial from the 1900s? 1919? 1917? Are you gonna get a one of those monocles? Do you have a monocle, Jeff? Berkshire Hathaway. Do you have are you playing bridge later? Are you at a bridge club, Hefe? Are you gonna drink Diet Coke and have and eat steak? My goodness, Berkshire Hathaway. Is your name Charles? Do you golf with your uncle? Do you drive a Buick? Are you found at the diner at like 5 p.m. for the special? Is that a late night for you? Berkshire Hathaway. Do you wear white Reeboks with khakis? All right. All right, guys, I gotta get out of here. Thank you so much for chiming in, guys, and your suggestions and your everything, guys. Thanks so much. I really appreciate it. Thanks for putting up with my nonsense here every day. It's tons of fun. I love doing it. So there you go. I think, again, the Carnage. Okay, there we go. I didn't stop it. Anyway, okay, guys, so that's sorry about that. The computer yelling at me here for a hot second. I'm like, what's going on? That's all I got here for you today on Zach's Live Trader. Yes, I'm going to do my Good, the Bad, and the Ugly. I got to put it together. So you will have that. It's going to be a long one. So I'll have that together for everybody. And then, what else? Tomorrow, the morning after session. Yeah, Trevor, you can ask me something in the chat. And guys, throw stuff in the chat. I get there eventually. Sometimes, you know, I'm doing stuff throughout the course of the day, so I'm sorry if I don't get there quickly, but you can just personally send me that, and it's fine. If you're not hooked up on Live Trader, shoot the emails, livetrader@zax.com. Of course, you can join me in the chat room. I keep forgetting to do. I haven't been doing enough plugging recently, but that's okay. We'll figure it out. So go ahead, feel free to ask me there, or livetrader@zax.com, or David Bartosiak, or D Bartosiak, whatever it is, at zax.com. I'm here for you guys whenever you need me. All right? So that's all I got, and I will see you all later. Have a good one.